One of the biggest mistakes stock market investors make whenever they're assessing an opportunity, a setup in the market, they always fantasize and look at the upside. How much money is he gonna make? Palantir to $1 trillion, him is gonna be 100x, SoFi to the moon, and all these things. Always about the reward, but they don't really pay attention to the risk. They don't look at it in terms of a risk versus reward setup. How much am I risking? What is the potential downside versus how much I could potentially make if I'm right on this investment? But this is how I look at it. I balance risk and reward. And my favorite setups in the market is when I have limited to no downside versus unlimited upside. And they don't come very often. But this is why I made this video, because I did find a setup, very interesting one for today. And I believe it has the potential to be one of the best performing trades or one of the best performing investments of 2025 that not a lot of people are talking about, because we have Bitcoin, Dogecoin is up 100% on the months. S&P is sitting at 6,000. There's a lot of hidden gems. There's a lot of hidden opportunities that not a lot of people are looking at. And this is my job as an investor to try to be early on in such opportunities and try to exploit them. And that's what I'm going to talk about in this video. I'm going to give you an example, give you some stocks, give you the whole thesis and everything around it. If you do enjoy it, all I ask you could please press the like button and let me know what you think in the comments. If you agree with me or disagree with me, let me know what you think. But for this video, for the thesis, I'm mainly talking about yields. So, for example, a lot of you asked me about TLT bond yields. I am talking about bond yields, bonds. I'm talking about REITs. I'm talking about dividend stocks in general. Anything that has a decent yield. This is what I'm going to be explaining and talking about in this video. Now, while the S&P has been going up 26.5%, you have the REITs. They've been sharply pulling back. Realty income, amazing rate. It's down 6.5% on the month. Triple net, I also used to own triple net, down 9.5% on the month. Verizon down 6%. American Tower down 10.5%. Pfizer is down 10%. VC is down 4%. WPC is down 7%. So a lot of the dividend stocks and REITs are going down. Not just REITs, a lot of dividend stock. Pepsi is still trading at 52 weeks low. Mondelez is trading near 52 weeks low. Hershey's is trading near 52 weeks low. CNI at 52 weeks low. A lot of those stocks are trading at 52 weeks low. Now, the interesting part about this setup is that it's not just about yields in general. But if you look at the 10-year minus the 2-year, which is the yield curve, and it has predicted almost all recessions, almost all market crashes except one. It's only been wrong once. And when it goes negative, after it turns positive, we tend to have some kind of an economic slowdown and some kind of a major stock market pullback or a risk-off scenario. This is what happened in 2006, went negative. 2007, it went back positive. We had the 2008 recession, stock market crash. Same thing happened before 99. After it went positive, this is when the bad stuff happened. It went negative this time and even turned positive. And it did go negative before COVID. But I know COVID was the catalyst, but it was trying to signal us that we had a slower economy. And the economy was slow back then. And this is what's happening now. It went negative and it went positive right now. And, it looks like it's going much, much higher. So if we do have some kind of a recession next year, some kind of a slower economic environment, some kind of a slowdown, some kind of a risk-off environment, some kind of volatility, which we could likely have, those are the stocks that will do best in this environment. Yes, those are the stocks that are selling the hardest right now because investors are focused on AI and crypto, not on what could potentially outperform in 2025, which is why it makes the setup very, very interesting. And I'm very happy to talk about it. And I like talking about stuff that not a lot of people are paying attention to and they're not going with the market. I mean, I love it. And it's very exciting. Now, the main reason why the 10-year, or I should say REITs have been coming down, dividend stocks have been coming down, is because the 10-year treasury has been skyrocketing in terms of the yield. The yield has been skyrocketing. It went from almost around 3.4% it was like in September. Now it's sitting at 4.3%. So this is a massive, massive move to the upside. And if you look at a basic technical picture, and I am not a technical analyst, but this is a very clear breakout. We did go below. Maybe we might go a little bit higher, but this is a very clear breakout on the 10-year, and a lot of investors are saying we could go up to 5.5%, but I don't believe it's going to happen. But for me, whenever I'm looking at the 10-year, which has started going up right when the Fed cut interest rates, the first interest rate cut when Jerome Powell cut interest rate, this is when the 10-year started to go up. Everyone was expecting yields to come down. Yields started moving up like crazy after the first rate cut. And we can see it from the price action of gold. Gold has also been skyrocketing. So if I'm looking at the price action of the 10-year and gold, it's telling me personally that most investors believe we could have higher inflation in the future, that the Fed was wrong again, maybe they cut too early, and maybe inflation is going to make a comeback. I believe this is what the 10-year is telling us because it just started going up after the first cut. So it's telling us that Powell could potentially be wrong again, and we could have higher inflation in the future. Now, for me personally, I have a different thesis. I believe we will likely have higher inflation in the future, especially with a lot of the policies that could be implemented in 2025. We could have higher inflation in the future, but I don't think it's happening anytime soon. So the higher inflation, in my opinion, could happen in later 2025 to early 2026. This is not something that's instant. We don't just cut interest rates and inflation picks up. So there's a massive margin for opportunity over the next 3 to 6 months to benefit massively from REITs, from bond deals, from a lot of the dividend stocks. If the market is wrong on this one, that inflation will come back, but it's not gonna come back anytime soon. And there's another indicator that's telling me that. And this is my favorite chart that I shared it once, but I don't talk about it often. But if you look in the purple line is the Fed funds rate, which is, whatever Jerome Powell said, so it's federal funds rate. And I believe now it's around 4.8%. And the other one is the 10-year, of course. Now, something that's very interesting, historically, whenever the Fed is hiking rates, once rates peak, it normally marks the top in the 10-year. The 10-year starts going down and it doesn't make a new high. Same thing happened in 2006. After they hiked interest rates, after interest rates have peaked and they stayed flat for a while, they peaked, it marked the top in the 10-year, and the 10-year went down from then. And the same thing happened over here. Whenever I should have put a circle over here, whenever the Fed was hiking interest rates, once interest rates peaked, it marked the peak in the 10-year and it went down. So this has happened pretty much every single time in the 21st century. And now I believe it's happening again. I don't believe this is a breakout, and I don't believe we're going to 5.5%. We might go a little bit higher, but I don't think we're going close to 5.5%. And if I'm looking at this indicator again, we have peaked. It likely marked the peak in the 10-year. We're starting to go down, and I would expect the 10-year to eventually follow and start going down. So if this indicator that's been right almost 100% of the time, if it's right again, it's presenting an amazing buying opportunity in bond yields, in dividend stocks, and in REITs, and in any kind of dividend-oriented or yield-oriented investment. And there's something else that would tell me that I could potentially be right. And this is what's happening in Canada. Canada is a different economy from the US, of course, but Canada started hiking interest rates before the Fed began, and now they're cutting interest rates before the Fed began cutting interest rates, and they hiked it, and now they've been cutting it. Now they're sitting at 3.75%, much lower than we have. But if we look at their inflation, it's 1.6%. So they did cut interest rates. They were not too early. Many people were saying that they were too early, but they were not too early so far. Inflation so far is still good. It's still under control. It's at 1.6%, and they will likely be cutting more interest rates very, very soon. The last cut was pretty big. I believe it was like 50 basis points. They were cutting 25, 25, 25. Then they cut it 50 basis points because inflation has been coming down. And even though it's not the same economy, but I see the same for the US. I see inflation coming down in the near term, and it could potentially reaccelerate, but it's not happening anytime soon, which is why I'm seeing an opportunity in a lot of the REITs and a lot of the, you could say dividend stocks. But one of my favorite ones is a stock that I owned before, and this is realty income. And from the start of the year, if you've been following my channel, I've been talking about realty income, and I said it's a good opportunity, low risk, high reward. And it did play out. People said it was boring. But since then, it went up like 23%. It went 23% in 3 months. It was a huge rally, plus a 6% dividend. But whenever the 10-year started going up, realty income started coming down, and now sitting at $57.65 per share. Now, in terms of realty income, it's my favorite one because it's just a large lead, very diversified, and it has like 12 years worth of leases. They have a lot of, you say, recession-proof tenants. But the dividend right now is 5.5%, so I'm almost 5.6% dividend. But you're getting the 5.6% dividend as interest rates come down, you will get a potential multiple expansion. The multiple over here right now is trading at 13 times. The mean was 17. So whenever we had 3.5, or 2.8% interest rate, the mean was 17. So 17 for the mean, now it's sitting at 13 and it traded as high as 24.5. I'm not saying it's going to go to 24.5, but now it's sitting at 13 and it traded as low as 11, and that was in March 2020. So you're buying it near a bottom multiple. You have massive multiple expansion potential. You have a 5.5% dividend, and you have the AFFO per share, which is mainly earnings per share, but for REITs, it's growing 3 to 4%. So it's not a dying company. They're growing per share metrics. They have a 5.5% dividend, and you have the potential for a multiple expansion. Now, this trade or realty income, or any REIT, realty income, triple net, VC properties, all those dividend stocks, they get very interesting if they ever get to a 6% yield. So if you could buy realty income again for a 6% yield, which is around 8% from here, around $52. $52 is around 6%. For VC is $28. If you can get a 6% yield, then you can get the 6% dividend, and you can get 4% worth of growth from the AFFO. So this is 10% per year. So you're getting 10% per year to get paid while you wait for interest rates to come down, to get to price appreciation of 20 to 30%. And it could happen in 3 to 6 months. So whenever I'm looking at rates, I'm looking at everything else. The downside is very limited, especially if they get to a $52 or 6%. The downside would be very limited, but the upside, maybe the downside is 5 to 6%, but from here, but the upside could be 20, 30, 40%. Plus, you're getting paid a 6% dividend or 5.5% while you wait for this opportunity to play out. For me, I like it very much. And I do have a few stocks that would mirror realty income, and I share what I do in my own group. This is a link if you're interested. But for me, if I want to buy realty income again, I would wait for 52 and get a 6% dividend, and then get my potential 20, 30, 40% price appreciation if I'm right on inflation coming back, but it shouldn't be coming back anytime soon, and it will likely come back in late 2025 to early 2026. This is just my opinion on this whole thing, not financial advice. Thank you for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.